Yeah, I mean, I think it would be pretty short-sighted, missing the forest from the trees, if we just focused on the losses today. Clearly, this company is in the top of the first inning at we think, transforming how people consume transportation, which is a $5 trillion market. They did $49 billion of bookings last year. There's a long runway for growth left yet.
Leslie, these are initiations, a lot of them from the underwriters.
Yes.
Are there any sells on the street now as a result of this, or is everybody
Not
still
that I saw. Neutral. The lowest price target right now is 42 by Susquehanna, which is about in line with where shares are currently trading. What's interesting, though, is you read through the notes from today, and I've gotten through almost all of them so far. You look at they talk about things like total addressable market. They talk about things like autonomous driving. They're not really able to do discounted cash flow models to assess a price target for where they foresee the company trading, in a year or so based on the fundamentals of the company because, they're still losing money.
Yeah.
So it's really interesting to read these and see kind of like how these analysts really envision the future looking for.
So how would you answer that, Brad? And how do you see them turning a corner and starting to make money? But answer Leslie's observation about what she has read in those other reports. I'm sure you've seen them too.
You mean not being able to do a discounted cash flow?
Yeah.
Yeah. I mean, there is no cash flow at the moment. So right. by definition, you can't look at it. Internet value creation, in our opinion, comes from initially share gains and creating network and flywheel effects that can't be surmounted, and those turn into competitive moats over time. We think that's exactly what's going on here. The one thing people tend to underappreciate about Uber, we think, is that the difficulty in achieving the physical moat, right? The physical network being in 63 geographies, 700 plus markets worldwide, that is going to become increasingly difficult to replicate. And obviously, when you're doing, we think $23 billion of net revenue just in 2021 and growing from there, you start to apply some profitability at those levels, and we think that's readily possible. You start getting to big numbers that more than justify the current stock price.
Can I ask both of you kind of a dumb question? Because I'm an Uber user, as so many of us are, and I sit there and I go, well, they're making all that revenue and so forth, and yet they're not. Why aren't they making money? I mean, are they underpricing? They're the number one player they've got the first mover advantage. Why aren't they making money? Are they just not pricing it right? Brad, why don't you take a whack, and then Leslie?
Sure, thanks. So a couple of things. One, they already are making money. Over a third of the business, about 35%, is making a significant contribution margin, which is a legit profit metric in this case, because they are applying allocated fixed costs as well as variable costs. And then second, just as you look out to the future, again, they're making investments around autonomous driving, several hundreds of millions of dollars, other R&D investments around future growth that can be lapped up. And as you fast forward 3, 5, 10 years in the future, the fixed cost leverage on this business is ridiculously strong. So I would question the notion that they can't ever make money.
Okay.